Good morning. Today is Wednesday, December the 6th. The time right now is 9:32 in the morning. Overnight, Wall Street has been pretty quiet. We have a big of a mixed bag here. And this is understandably so because the market is focused on Friday's non-farm payroll. Of course, yesterday we have a series of other less impactful numbers. We have jobs. We actually came in better than expected. We can see that the ISM services PMI also came in above market consensus, and this has caused a little bit of movements in asset classes, but not by very much. We can see that the Dow Jones Industrial Average actually edged higher. We can see the micro E-mini Dow Jones futures currently is trading at 36,237, which is a bit higher than the day before. So we can see prices traded to a high of 36,338 in the futures contract, which is not that far away from the all-time high, which was last traded in January of last year at 36,832. So there's a good chance the market may actually go and challenge this level and maybe even break it. But this is my concern here. Even if the market do break the all-time high, I want to see how it closes by the end of the week itself. If it doesn't close above 36,832, then it would be at risk of a key reversal, very much like what we saw in the gold market yesterday. And in the S&P 500, we can see the prices also edge a little bit higher. The high traded so far is 4,607 and three quarter, but from where it is to where the market needs to break the all-time high last year is still quite a bit of a distance. The level is 4,808 and a quarter, and currently the market is at 4,585. So we are at least 200 to 300 points away from these levels. So we have to watch out for less gain in the S&P 500. Immediate barrier to higher prices is 4,619 and a quarter to 4,634 and a half. In the Nasdaq 100, we also see a bit of a bounce coming in from overnight trading. We can see the prices right now is at 15,969 even. Also, this is not that far away from the high traded last midweek at 16,207 and three quarter. From where the market needs to break the high, the all-time high is actually traded in November 2021. That level is 16,767.5. So we can see there's going to be quite a bit of the distance before the market can even challenge those levels. And in the Asia market, you can see that Nikkei actually benefited from the overnight strength in the US equity markets. Market dipped to a low of 32,700 before we saw a strong rebound this morning. And this is part of a three-wave pullback, which actually set the stage for higher prices, perhaps even taking out the year high at 33,950 above recent high at 33,870. So this market is actually primed for higher prices, technically speaking. In the Hang Seng, we can see the market may have actually found a temporary bottom here yesterday at 16,271. Prices is a little bit soft, but again, I think the market could be getting ready to bottom out. Maybe it has already bottomed out, but I'd like to see prices dip into the 15,945 to 16,125 in the futures contract in the Hang Seng futures, and I think that will be a great level for the market to stabilize before it decides what you want to do next. And over in the dollar, we can see that the dollar continue to rally, and we can see this is part of a rebound from the low of 102.38, and this is happening in the three-way structure. Ideally, I think the market will probably be targeting the 104.23 to 104.44 levels, and this is where I think the market will become very vulnerable to the resumption of the down move that we have seen. Okay, so as the market edge higher to 104, look out for a cap at around 104.22 to 104.44 before the market re-challenge the 102.38. And in the euro dollars, euro has actually fallen a little bit deeper than expected. Right now, the market may actually be gunning lower, perhaps to challenge the 106.90 to 107 levels. This is where I think the market could actually trade a little bit softer in the face of the resurgence in the dollar itself. Okay, so do watch out for that, at least for the meantime. But I would like to sell the euro. I would like to buy the euro dollars going forward, but again, we will have to buy at sensible level. I think the 106.90 to 107 level is actually a better place to do so. Whereas the sterling looks a little bit firmer. Prices actually dipped into the 1.2 25.95 levels, and market right now is currently stable. And this is a three-way structure that actually gives rise to the idea that maybe perhaps sterling may have already found a bottom and is getting ready to challenge the 127.33 high. And there's a immediate target here at about 129.41. So let's see if the market can break the 127.33 high and gun for 129. So let's see what that happens as it unfolds. And in the Aussie actually have a strong move to the upside, but I think the upside is going to be quite limited. I think the market is going to be kept somewhere at about 0.66 to 0.6630 levels, and this could actually see prices come back to 0.6450 to 0.6490 levels. I think this is a possibility. I'm keeping the option open. And in the dollar versus Canadian, I think dollar Canadian for a time being is actually quite firm, but I think top side is also quite limited, possibly to about 136.31 to 136.61 levels before it revisit the lower end of this trading range at 134.80. Dollar yen managed to hold its own, but I think it is still very feverish right now. The low traded is 146.23, and the currently market is at 147.23. So we have a bounce of about 100 pips, but I said top side is quite limited. For all intent and purposes, I think this downward channel here, the top of this channel, the roof is probably around 147.50 or 75 levels. So again, watch out for a cap around below 148. And then in the gold market, we can see gold prices continue to retrace its massive gain to $2,148 or $2,149, and it's currently trading at just about $20, $2,020. So this is again a known area of support here, and we can see that prices has been holding up pretty well here at $2,005 and $2,015 thereabout. We have an overnight low at the $2,010 thereabout. So I think this level for time being should be able to hold, and let's see whether the market will be able to bounce. And if it does bounce, how much of a bounce can it be? I think the reversal that we see from $2,149 could be damaging, at least in the near term, with possibly of further losses going forward. There is no saying that the market cannot test the 2000 levels. I think there is that open position that because most of the short has been shaken out of the markets. So those who have gone long above the $2,073 right now will look very vulnerable to further downside. I think there's going to be a squeeze of the long position, possibly causing price to escalate lower, at least for now. In the silver market, we are seeing a much deeper correction. We can see that silver on a percentage basis has actually fallen quite a fair bit compared to gold market. We can see that although gold has actually led the market higher, but we can see that silver prices just rose just short of a ideal target. The high traded is $25.91. We have a target here at $25.94. So it just missed that by a little bit, and market is coming back down. And the immediate level of support is probably going to be residing at $23.55 to $23.74. So look out for some kind of support emerging from this price range. And over in crude oil continues to retreat, and we can see there was a bit of a rebound attempt, but at the end of the day, market actually closed below $72 per barrel with a low at $71.95. This is the lowest since February. So this has been coming down in a series of 4 to 5 sessions right now, and largely this is due to the fact that the US has been pumping more oil and exporting more oil than the production cut promised by OPEC Plus, which we knew last Friday. Now, US is currently exporting something like 6 million barrels a day. That basically took up the slack from the production cut by OPEC Plus. So near term, there should be some kind of further softness going forward, but I think the bottom is going to be very nearby. The round number of $70 per barrel will be a very attractive level for the market to actually hold out. In fact, right below here, we have $68.92 and $70.06 in the WTI crude oil. They may actually hold the market. I am mildly bullish on crude oil, and despite the near-term weakness, I am medium-term bullish on crude oil. So I intend to pick up some more crude oil prices near the $70 per barrel pricing. Okay, and over in Bitcoin, we can see Bitcoin continue to edge higher. We have a new high traded this morning here. I have to update this chart here. You can see that the price actually went up much higher. Right now the price is already above 44,000, and we are already at $44,470.51. And this is again leaving open the possibility of a challenge of $48,000, which I mentioned yesterday. So this is a unfolding event. The market right now is super bullish. Unlike what we see in gold market, there was no major profit taking. In fact, we can see sign that there has been people who has been adding on to positions since then. Okay, there is this level here that has been seen some more adding of long position. So near term, I think the market will be probably gunning for 47,000 to 48,000. So this is a immediate target. This is all I have for you for today. In the meantime, you take care, and I'll come back to you tomorrow with further updates. Bye bye. Take care.